Hey, hope you're having a good day so far. Today is February 19th, Friday, and on this post I'll be telling you about the overall crypto markets very quickly, which includes Bitcoin dominance and Bitcoin price action, and see how they could potentially affect the overall altcoin markets in the short-term future, before diving into Stellar, XLM, USD, and see what exactly has gone on in this market. I'll be telling you about the bullish and bearish case scenarios for today, as well as the short-term price prediction on this market according to what I'm seeing on the charts. Before I begin today, make sure to subscribe to my channel and like this video, as I'll be keeping you updated on the latest crypto setups on my watch list, regardless if it's a good day or a bad day. If you guys want to support me and don't already have a Webull brokerage account, you guys can use my referral link down below. They're still giving away 2 free stocks as of today upon a successful sign up and a qualifying deposit of $100 US, and I will also receive a referral bonus if you guys sign up under me. Please also read my full disclaimer below. I am not a financial advisor, and this is not financial advice. I'm purely sharing my own speculation opinions on this market. I cannot tell you the future, and you should always do your own due diligence before trading or investing in this market, as it's extremely risky and volatile. If you guys have any questions or comments, please do only leave them in the comment section below. But I'll try my best to get to as many of them as possible. Now, see what exactly is going on in this market. First, most importantly, I do take a look into Bitcoin dominance. Tells me where the money could be trending into. Would it be Bitcoin, altcoins, or neither? Today we do have Bitcoin dominance up about 0.7% today. This breaks down to Bitcoin price action up almost 8% today, while total altcoin market cap up almost 6% today. Now this is the upside of Bitcoin dominance trending upwards. It's when I usually see Bitcoin price action leading that of the gains ahead of total altcoin market cap. I usually emphasize Bitcoin dominance trending downwards, which is generally speaking better for the altcoins on both the upside and downside, because on the upside of Bitcoin dominance trending downwards, I would usually see total altcoin market cap leading that ahead of the gains ahead of Bitcoin. Now let's see if we have any hints here on seeing if Bitcoin dominance will continue trending downwards, or would it actually change course from here. I'll be more inclined to believe that Bitcoin dominance will actually continue this downtrend if we start making lower lows here again. Okay, the last low in terms of close was about 60%. Now, if Bitcoin dominance actually comes back up, and this is the daily time frame I'm looking at, comes back up to this fib level at about 64.25%, I'll be more inclined to believe that Bitcoin dominance could actually be changing course, because this would look more like an inverse head and shoulders pattern, and that is a bullish pattern. And I would not be surprised if Bitcoin dominance actually changes course, because now Bitcoin price action is making new highs. So I would actually be, I'm not surprised if more money is flowing into Bitcoin for the time being. Now let's take a look into Bitcoin price action here. Okay. Currently at about 55.7K. I don't think any major pullbacks are going to occur in the next few days. Maybe minor ones, but when Bitcoin price action pulls back, it could still have some effect on the altcoin price action. The magnitude of that effect would depend on how far up or down Bitcoin dominance is trending. Okay. Let's take a look into Stellar, XLM, USD, and see where exactly we're at. So last time I did say that there was a falling wedge pattern. That was something like this. However, it did not play out, and it did break to the downside. Actually, not exactly. So falling wedge pattern was something like this, and then it actually did look like the price action broke out of this reconstructed falling wedge pattern instead. But I do also note a double bottom pattern here as well. Okay. But before going into the smaller time frame patterns, let's go over the monthly down to the daily, these macro time frames, and see if we have any overbought RSI readings as red flags or possible bearish divergences that I should be looking out for. So let's go from the monthly time frame here. We do have a RSI reading of about 79. Okay. I don't see possible bearish divergence scenario here yet, but in overbought territory, so some type of pullback is not unreasonable, even though it could still keep going. The weekly time frame here, we are at RSI reading of about 85. I don't see possible bearish divergence scenario here yet, unless this weekly candle actually ends up closing bearishly. Okay. 3-day time frame here, possible bearish divergence scenario, because now I would have to compare the next new high on the 3-day time frame, if it makes a new high, with the previous high, which had an RSI reading of about 77, which I don't think it's unbeatable at all. I think it just needs to make a pretty decent move here to negate bearish divergence. On the daily time frame, however, the last high here had an RSI reading of about 84. Okay, we're currently about 69.70. Okay, so that's going to be it's going to need quite a bit of a move on the daily time frame to negate this bearish divergence scenario. Let me do a quick recap. Monthly time frame, we're in overbought territory, about 80. So some type of pullback there is not unreasonable, even though it could still keep going. Weekly time frame, if the weekly candle actually closes bearishly, then I'll be looking out for the next new high on the weekly time frame and see if possible bearish divergence would occur. Okay, 3-day time frame, possible bearish divergence scenario, as well as the daily time frame here. Okay, these are going to be some things I'll be looking out for in the very short term. Okay, the 3-day and the daily time frame for possible bearish divergence scenarios. Now let's take a look back into the 4-hour time frame, where I did mention there was a falling wedge pattern last time. They look like price action has broken out of that pattern to the upside. Okay, so falling wedge patterns, according to Thomas Bukowski and his website, thepatternSite.com, you guys can verify that stat on your own or with your own sources. It's a 68% chance of it breaking upwards. Now, there's also another pattern that's within this falling wedge pattern, which is a double bottom pattern here, okay, with one bottom and the second bottom here. Let's see if they would actually have the same measure targets here. So no, right? If I actually use the double bottom pattern, that would actually give me a higher measure target as opposed to the falling wedge pattern, okay? The double bottom pattern will give me a measure target here of about 65 cents there, okay? And the falling wedge pattern measure target will give me about slightly under 63 cents, okay? So this is what I'm looking at. So between 62.6%, 62.6 cents to about 65 cents would be the measure target, depending on which of these patterns the market agrees on. Okay. Now, let's take a look into the bullish and bearish case scenarios here. Since it looks like the falling wedge pattern has been broken out of, I'll be more concerned with the double bottom pattern here. Okay. Let's look into the hourly time frame, where I still don't see an hourly candle close above this double bottom pattern since it has formed. Okay, so the formation was right here, and we have not seen an hourly candle closes above this 54-cent level since the formation. So if I start seeing hourly candle closes above this neckline of about 54 cents and staying hourly candle closes above this 54-cent area, the bullish case scenario would be that the price action will go towards its measure target. Now, like I said, there are two measure targets I'm looking at right here. So something in between I think is still reasonable. Okay, but measure targets are approximate theoretical targets only. May actually be different in real life price action, more or less. Bearish case scenario here. If price action actually comes down to about 46 cents with an hourly candle close, that would discredit this double bottom pattern, as we will see a third bottom. Okay, so hourly candle close at about 46 cents or lower, that would invalidate this double bottom pattern. And the next level of support I'll be looking at will be the daily 21 MA, because that will also tell me that this fib level has been broken if this double bottom pattern gets invalidated. Then the next level of key support I'll be looking at will be the daily 21 MA and see if that holds. Now, these are my bullish and bearish case scenarios for today. Let me know if you found it helpful. Give me a thumbs up if you did. Let me know agreements, disagreements, feedback. I'd love to hear them. Hope you manage your risk carefully. And if you would like to see any more of my most recently uploaded videos on YouTube, you guys can check out my links up here on YouTube. See you next time.